So in this lesson, we're going to talk about high rejection zones. As you can see here, there's a lot of rejection in this area, and what happens is it forms a rejection zone. So when price does revisit this area, there's a high likelihood of a rejection. So just based off common sense, where would your rejection zones be? Let's take a look. So here you have a rejection zone. Why is it specifically this area? Because if you look closer, you had a rejection here. You had a rejection here, 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 and you had a rejection here. So what I would be looking at is if price gets to this level, I might be anticipating a rejection. Now, if price breaks, I'm anticipating a retest. So this is one level of rejection. So let's look for another one. This is another level of rejection. Why? Because if you stretch it out, what you have here is a rejection here, a rejection here, a rejection here, a rejection here, here, and here. Price failed to get above this level. This would be another rejection zone. Price is approaching a rejection zone, and you're looking for a reversal. Price gave you a minor reversal. So what happens here is you're not getting rid of this rejection zone just for the fact that price did not blow through it. If price does blow through it, you're completely erasing this rejection zone and you're starting over looking for another one on current time frames, on your current price action. So now price broke this level. Where's our next rejection zone? Right here. So you could be anticipating something like this, a rejection here, and for price to continue bullish. Let's see. You had your rejection, and price broke structure. So what are you waiting for? You're waiting for price now to reject from this area inside of your rejection zone and to continue higher and possibly target this area. And you had your rejection. So now, what is your next rejection point? You can still stretch this level out, and the fact that this level was valid, you can still stretch this level out. And what can you anticipate? You can anticipate a retracement back here, come up here, reject, and then you can decide if price can continue higher and you look at the macro, or price is going to continue lower. You had your rejection. You had your rejection right here. And it looks like price is failing to make contact with your rejection zone. Okay, so here we are on a daily time frame. Let's look for our high rejection zones. We want to look at historic price. And this is the difference between high rejection zones and your regular support and resistance. Because if you're following support and resistance, you're expecting price to react from a specific price point, which doesn't really happen that often. You want to broaden up your zone. And that's why we use zones instead of just specific levels. So what do we have here? We have rejection here, here. This would be one level. Why are we considering this level? Because you had a rejection here, here. Prior to this, you had a rejection here, and you have rejection, 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 rejection. Another rejection here. So this is one level. And think about it like this. You want to work in probabilities. Look at the amount of times the price did react off this level compared to the times it didn't. So you had 11 times where price did react from this level, and you had one time where price didn't react off this level. So the probabilities are in your favor, and trading is a game of probabilities. So let's mark up more levels. You have a level here. You have a rejection right here. and you have a rejection prior to this right here. If you take a closer look, price broke your level but came back and rejected of this level. So this would be the end of this level, and the height of this level would be this highest rejection point. And you could just make it just a bit bigger to consider this rejection. So now you have your two levels. Let's look at another one. We have a really good level here. Price rejected from this area multiple times. And you can broaden it just a little bit to take into consideration this rejection right here. Right where all the price is rejected. And it might not look as clear to you, but if you go on a weekly time frame, you would see the clear rejection points. So stop thinking of the fact that there is a wick. You can see that price struggled in this area. Price struggled right here, right here, right here, and right here. So this entire area, price struggled to get through it either way. That's why we're considering this area. So now let's go back on the daily. We can drop to the 12-hour. So let's look at how price reacts from our levels. And we'll cover entries in a second. You just need to understand the basic forensics. So you had your rejection here. Now you have your rejection from this level. So now we have one rejection. And again, this is a game of probabilities. You had your rejection from this level. So that's two rejections. So what happened here? Price rejected from this level, came down, rejected, went up for air just for a little bit, came back down to our zone and rejected again. Now we have another micro rejection right here. Remember, this is the 12-hour candle. If you look at it from a 4-hour perspective or even a 1-hour perspective, this is a fair rejection. This is 75 points. So these are not small rejection by any means. Let's go back on the 12 and continue looking. Look how many times price is rejecting from these levels before finally breaking it. So now you had one rejection, 2, 3 micro ones, so we can count them as 1, 4, 5, 6, 7 before failing. So you had 7 versus 1. And this is the power of your high rejection points. So let's look how we're going to approach this as far as our entry goes. So if you have your rejection zone right here, what you're waiting for is you're waiting for a range to be formed. By range, I mean either you want a swing high and swing low formed. Why would we consider this a range? Because it's a price point. It offers you a premium and discount. And look at this as a fair trade market where you can buy something for the low, which would be for cheap, or you could buy something at an expensive rate. So you would want to see a range, or you'd want to see a consolidation, which would be a form of a range. So let's say price approaches this level and consolidates. This would still be a form of a range. And what are you waiting for? You mark your high and low. This would be your high and this would be your low. So this is your price range and you're waiting for price to break below this level. And once price breaks below this level, you can get in a trade with your stop loss being here right at the top of your range, and your TP with your stationary 1-to-1, 2-to-1, 3-to-1, and you can look on previous price action and see if there is another rejection level that could stop price. You have a rejection level somewhere right here. This could be your take profit. So let's take a look at this example. So we're in a daily time frame, and let's mark up our rejection points. In this case, I would go on a 12-hour time frame to get a better view. Again, you always want to start off with a high time frame, but you can always drop down for a better view. It's all about what you can read. In this case, this is a high rejection point. Why is this a high rejection point? Let's zoom in. Because it's common sense. You have rejection here, rejection here, rejection here, 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 and then here, here. So think of it as areas of struggle. As you can see, even when price came down, it did not break this level directly, and it did not break this level directly in the bullish side either. So price found struggle in this area, and that's how you locate your rejection point. So try not to overcomplicate it. And let's look for a counter level. So what I see here is you have a major level right here. Why is this our major level? Again, common sense. Price rejected here, 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 prior to this here, and even here. Price found struggle in this level. So now we can go on the 1 hour time frame or the 4 hour, whichever one you prefer. Obviously, in this case, you want to go low, but you don't want to go too low where price action just looks insane. Now let's look for our range. Okay, what do we have here? Price is in our zone. What are we waiting for? We are waiting for our range. So what do we have here? We have a swing high, and prior to this, we have a swing low. So if you go on a lower time frame, as in 30 minutes or 15 minutes, you would see it clearly. You would see that there was a swing low, swing high, and back inside the range. So now this is your range. So what are you waiting for? You are waiting for, let's go back on the 1 hour, just to keep it simple. What you're waiting for is a break. So once price breaks below this level, you want to get in a entry, and your stop loss would be above your range just in case of a quick stop hunt. If you want to play it safe, you can obviously have your stop loss right here, but this would kind of ruin the point of looking for a lower time frame entry. So your first TP can be 1-to-1, and if you want another take profit, you can look at your micro rejection level. So what do you have here? You have a rejection point right here. Let's make it red. Look how many times price rejected this level on the micro. Price rejected here, 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 here. So this could be our first TP. And your second TP could always be, after taking partials, your major rejection zone. So let's see. Your first TP's hit. Price is finding rejection. Again, price could always find rejection in this level. And price blew through your micro rejection, going for your macro rejection level. So now what do we have here? Let's say you want to take a long position. Again, don't worry about the fact that price went below your level, because think about it. This is the 1 hour time frame. On the daily time frame or the 12-hour time frame, this is still a wick. So keep that in mind. On the higher time frame, this is still a wick. So you have your swing high here and you have your swing low right here. So once price breaks below this level, breaks above this level, you can go for your 1-to-1. In this case, you could look for your micro rejection again and look for another stop loss. So on a 1 hour, show me an area with high rejection. I have an area right here. Price could find rejection in this area. And this is where I wouldn't take this trade, just for the fact that there is a high level of rejection right here. And a trade like this wouldn't make sense. But let's see. Let's go for a 1-to-1. Another range is formed. So when another range is formed, now you can shift your entry point. So now your entry point can be right here, your stop loss here, and this makes it better. Now you can go for a clear 1-to-1. So let's look at another example. Let's mark up our levels. So from what I can see here, we have a level right here, and we have a level somewhere in this area. I would have to go on a lower time frame. So let's go on the 12 hour. Okay, perfect. You have a level right here. And a level right here. Why are we picking these level? Again, obviously common sense, rejection, 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 rejection. Why is it this level? Rejection, 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 rejection. So this is the only space for clear traffic between these two rejection points. So now let's go in the lower time frame. So what did you have here? You had a range, you had a swing high and a swing low. Obviously, once price got above this level, you're in your trade. So even though price did pull back, your stop loss is still right here. And we kind of missed this trade. So let's look for another one. And price should expand. Your price expanded. What do we have here? We have a swing high. So now let's mark up our swing high. This is our swing high. Now let's see if we can get a swing low. And we have our swing low. So price went down and came back up. So now we are looking for a entry below this level right here. We're looking for an entry, and where could our stop loss be in this case? We look for our micro rejection zones. So our micro rejection zone could be somewhere. Could be somewhere right here. So me personally, I'm not a fan of this trade so much, but let's try out a 1-to-1. Somewhere here. Yeah, let's try out a 1-to-1. Okay, we had our 1-to-1 complete. Now let's look for another trade. And look at how price is on the 12-hour time frame. Price rejected from this level and could be coming back to our macro rejection level. Let's go back on the 1 hour. Okay, so what happened here? Price made a swing high and came down, made a swing low. So potentially you are in a trade if you want to take another trade. Me personally, I wouldn't take this trade because just look how tight the range is. Your potential TP is somewhere right here. And as expected, the trade did not work out, but you have another range. You have a swing low and a swing high. So once price gets below this level, you can potentially take the trade. And here, your next level of danger would be somewhere here. And your one-to-one is done. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, and make sure you leave a comment and let us know what video do you guys want next.